Welcome back to Precision Trader University. In today's video, I want to take you through and show you how to use Bookmap to guide you through the market. Bookmap is the most powerful trading tool in the stock market, allowing you to visually see all the major liquidity where the major buyers and sellers are sitting in the market, and understanding how to read that liquidity and take advantage of it. Put you in a position where you can turn the market into your own personal ATM. So with that in mind, we're going to check out Tesla for today. This was a live trade that we took today. Now, first things first, we're looking here in the pre-market. We can see here Tesla started the morning around 183, 183.50. Okay, but we know, if you haven't watched previous videos, please do. We know that when we see a major band or a major level of liquidity, these orange and red bands that we can see on $5 increments, okay, we know the market wants to gravitate into these areas. All right, so with that said, our closest major liquidity level is 180. So we start the morning around 183. Your bias is absolutely that Tesla's going to suck down into that major liquidity below. Okay? The only way that doesn't happen is if SPY goes the opposite way, and it is flying. Okay, so you want to try to get a bias for the morning, this is how you do it. So anybody trying to play opening range breaks, that type of thing, use this for your bias. Okay, so you get if you can get that to line up with it, works out beautifully. Now, don't have the candles. Unfortunately, the candles disappeared after a certain point today, so got the price line, which is A-okay. Now, it's one of those that you could have came down here and you could have just took the risk of buying the dip at 180, okay? I mean, if you're gonna buy the dip, this was a solid place to buy it. The only thing that you had to worry about here is once you start looking at these, these $5 increments, you realize that, man, there's a lot of liquidity at 175, a lot of liquidity at 170. So do you really want to find yourself in a situation trying to catch the knife? Oof, no thank you. No thank you. So in that situation, if I'm going to try to catch a knife, I'm going to try to catch it on dumps through major liquidity to the downside, $1 to $2 dumps through. I'm not going to try to catch it right at the major liquidity. You make a habit of doing that, trust me, you're not going to like the results. So with that said, on this scenario, bam, it did pop here at 180. Okay, so please don't use this as a reason to be like, oh, every time I see major liquidity on a major level, $5 increment below, because again, guys, the market is simply moving from one $5 increment to the next. So if you understand that, hey, major liquidity in Bookmap that I see on the $5 increments, I know that, hey, I'm either going to play into that level or I'm going to play off of, a rejection off of that level. So it's, it's pretty simple whenever you start bringing it down to the basics of price action and being able to see, the order, the live order sitting in the market. So with that said, Tesla does bounce here. All right. Now, again, that was not, that was, 50-50 whether it was going to bounce there. Now, what is not 50-50 is as Tesla recovers here, okay, Tesla starts recovering, a stock that has lots of liquidity behind and that's pumping away from liquidity like that, all this liquidity below, and it's pushing away from it, and there's no monster major liquidity above, okay, you look up here to the next $5, $10 increment, nothing, and you see a lot back here, that automatically tells you that when you are getting to the $5 increments that it's pushing away from, the probabilities of it pulling back off of it are extremely high, okay? Very, very high. So needless to say, the $5 increment here at 185, okay? 185 and also to 186. We took advantage of both today. Okay, because we knew that there's always major liquidity on $5 increments, and there's tons of liquidity back below. So 185 and also to our push through strategy, which is a $1 push through, we knew that those were going to be, quite Quite easy money. As you can see here, our initial pump up today to the 185 gave us a beautiful dump all the way back here around 183. So again, this ain't, you can't see it on $5 increments, okay? But you know, because it's a $5 increment, there's going to be major liquidity around that level, and you know that your bias is to the downside. So when you talk about the ideal place to reject, you're looking at the $5 increment. So needless to say, we get up here to around 185, bam, we dump back into 183. They pump it back up to 185 again, and then proceeds to dump all the way back down here to into the 182s. Okay, so got the 185 entry. Okay, now we're looking for 186. All right, 186. So we got our 185 money. Okay, and now we're just patiently waiting for a potential push up into 186. Okay, so ultimately we finally get it. There we go. Finally get our push up into 186, and again proceed to dump all the way back down into the 184s. So a nice $1.50 dump there. So with that said, a good $2+ on the 185 dump, and another nice $1.50 dump here on 186. And we ended up finishing the day. Where did we finish out? We ended up finishing out right at 185 for the day. So with that said, just a beautiful example of leveraging the liquidity, understanding where the major liquidity is, and how ultimately the stock wants to, again, if you got something that's trying to push away, if you got a stock that's trying to push away, and you come in here and you look at these $5 increments, and you see all the majority of liquidity to the downside, and you got a stock pushing away from it, you're pretty much, going to have money at the bag as it pushes up to the $5 increments above. So yeah, it's pretty it's pretty easy money, to say the least. So with that said, I hope that gives you a little bit more insight how to take advantage of a situation like that when you get days, because again, when the market's not, again, everybody loves to try to catch momentum and all that kind of stuff. Well, it's all well and good when the market is trending and moving on momentum, but you got to realize there's a lot of days where the market's going to be pulling back, okay, and then trying to recover or falling through the floor. And the question is, do you have strategies to be able to take advantage of those days? So with that said, with our strategies that we use, we absolutely can take advantage of whatever the market's doing, whether it's pumping to the upside on momentum and really trending up to the upside, or if it's chopping around, or if we're falling through the floor there. So you really want to have a tool, a club in your bag for every type of market trading day that you get. That way you can always ensure that you can find opportunities. It's not going to put pressure on you to be over trading and looking for stuff that's not optimal. So with that said, appreciate everybody that watched the video. If you have any questions, feel free to put them down in the comments, and appreciate everybody that made it to the end of the video.